Hi, this is Andy Filipiuk in Toronto for the week of May the 16th. Financial markets globally continue to sell off, whether it's stocks, bonds, real estate, everything seems to be in a sell mode right now. Now, I've posted a chart of the US dollar, and this is primarily, I believe, the main reason for the global sell-off in asset prices. Since the start of this year, the US Federal Reserve has been tightening interest rates and also talking about how much they are going to raise interest rates. Now, if one looks, they are the only large central bank in the world right now that is tightening. China is loosening, Japan's loosening, Europe hasn't begun to tighten. And what this is causing is currencies to, money to move from different currencies into the US dollar. The US is paying a much higher interest rate, and so capital is flowing into the US as a result. Now, one of the problems of being the world reserve currency is when the US dollar strengthens, it puts tremendous pressure on liquidity and on borrowing cost. As I've mentioned before, the US is the world reserve currency, so most corporations that want to borrow large amounts have to borrow in US dollars. As the US dollar goes up, those borrowing costs become more and more. As interest rates rise and the spread between what government bonds and corporate bonds yield also increased. So borrowing costs have gone up tremendously globally. So in a certain sense, the Fed has already created a situation where the liquidity and the market tightening in credit markets has already occurred. Now, we're probably going to see more tightening because the Fed has stated they're going to continue to raise rates no matter what. Now, I've included a chart as well called Exter's Pyramid. John Exter was a economist in the US in the 1950s who created Exter's Pyramid as a way of showing how risk behaves and how asset prices behave. And if you look at this, we have gold at the base of the pyramid, which is sound money. Right above it is the US dollar. And once you start at the US dollar, that sort of symbolizes as you go up the pyramid, greater risk is taken, and you can see the different size in the asset classes. Well, when an economy globally is expanding, money tends to move out to the top of the pyramid. Conversely, when there's fear and it's contracting, money moves down the pyramid, and that's what we're seeing right now as the US dollar is rising against all currencies and most asset classes. Now, as the US dollar continues to rise, you see gold beneath it. I believe that gold will start to rise once the US Federal Reserve realizes that they've tightened too much and they're going to be forced to, and again, start to print money. So we could see markets go down a fair bit before we're done here, but there's no way the Fed cannot step in and support the global credit markets, as that is what drives economic growth globally. Thanks for watching.